Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, April 19th, 5:02 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state has changed. We're in a mild correction. That means we're more than 4% off of the high on the S&P 500. Let me quickly bring up the different market conditions that we track and our expectations for what our portfolio should be doing under those market conditions. They range from a strong bull market like we haven't seen since back in 2020. This is really a combination of duration and strength. This recent bull market that we had certainly was strong enough, but if this peters out at 5 months, it's not a major bull market. And then you can see we've got early bull markets, mild pullbacks. This is where we were until we hit, this is just the guidelines we use until we hit minus 4% off of the high. Then we call it a mild correction. Remember, all these worse market states below all start with a pullback, then a mild correction to a moderate correction to a harsh correction to a bear market to a severe bear market. And if you just eliminate your exposure to the market during the bad times, your capital will compound during the good times. And that's what we strive to do here at Revere. So where were we? Okay, mild correction, downgrade to the market state. You can see the trend gauge over here. Same red arrow on market leaders, and they got worse today. We'll talk about that in a second. Same red arrow on our short-term trend, as all five of the major indexes are trending below the 21-day moving average, and the slope of the line has rolled over. And we also downgraded medium term because all five of the major indexes are below their 50-day moving average, and the slopes of the line have either rolled over or the 21-day cut down below the 50-day, which is a bearish trend signifier. Long term, and remember, I mean, you can see how much worse markets can get from these market conditions, but long term, you don't reach the harsh correction level until we break the 200-day moving average. That's normally about a 10 to 12% move off of the highs, depending where we were when the pullback started and the slope of the 200-day moving average. But all five of the major indexes still above that level, and we invest accordingly based on what's going on these three timeframes and the action of leading stocks. So what happened today? A lot going on. Started last night. Iran responded with bombs. I'm sorry, Israel responded by bombing Iran, and the indexes took a big turn down. Oil spiked, and we were down over 1.5% at the low on the S&P 500. But that signified a bounce right at the 100-day moving average that we were talking about. And by the time the market actually opened today, we recovered basically all of it to be near flat, just opened up down a small percentage, but no rally to be had today, as shortly after the open, and actually before the open, something very strange happened. I've never seen this before, but one of the market leaders just said, hey, we're going to announce earnings on such and such date, and this is SMCI. And there'd been a lot of chatter because the last two earnings reports in a row, they pre-announced to the upside. And this time, all they did was announce their earnings date, but didn't pre-announce. And that absolutely took SMCI apart, along with any other stock that could be connected with AI data center hardware. And that included NVIDIA, it included VRT, it included ALAB, Micron, all hit very hard. We'll go into it when we go over the 2121 list. But the bottom line on the day, despite the mixed close and what you might hear on the radio on the way home, that the Dow was up 0.5%, underneath the surface, leaders, especially tech leaders, smacked really hard. But, and where I said this the other day, this is the second straight day where there were where there was a lot of green to be seen, but it was all money flowing into value type sectors, once again, into staples, into financials, into utilities, healthcare, and real estate. And so it's more of a rotation than an exit at this point, but the tech uh, is just such a big percentage. The XL, CK, and Y are just such a big percentage of the S&P 500 that you really can't keep it flatline, but you can see the discrepancy or the divergence, I should say, among a lot of these indexes here. So description is mixed close, leader smacked hard. The 21 over 21 list, no need to look any further than this for how leaders are doing. Only 3 up and 18 down. The 21 over 21 down an average of 3.98%. The big 7 down an average of 4.21%. 2 of the 7 down massively. Netflix on earnings down 9.1%, and Nvidia down 10%. Tie it to that SMCI uh, non raising of guidance, which is extremely strange to even say this, and it's certainly something I've never experienced before. But these things don't happen when the market is in a strong state or they're shaken off. But any sign of a jittery market and leaders, it started happening a month ago, and now they came for the piano players today. That's a saying that says when they raid the house of ill repute, even the piano player gets arrested. And we'll call Netflix, Nvidia, and SMCI the piano players today. We'll break down the 21 over 21 list so you can see just how bad it was. But I'm also going to show a scan for why I think I'll have 21 leaders over the weekend work to represent on Monday. So the final numbers there, RG8 down 0.96%, also not a good number. S&P 500 opened down 0.1%, closed down 0.88. Equal weight S&P though up 0.38%, and again, this is the rotation taking place under the surface. Dow Jones, Nasdaq 100 down 2.1%, equal weight down 0.83, and the big discrepancy between the two of them, even though equal weight was down 0.8, was again those big 7 being weighed down by Netflix and Nvidia. Dow Jones Industrial Average positive as United Healthcare, which had been a boat anchor, helping the Dow. Dow up 0.56%, mid caps up 0.39, Russell 2000 small caps up 0.24, Global 60/40 down 0.31. GROTECTION, our flagship portfolio, down 0.64. Speaking of the piano players getting carried out, we either sold or hedged the rest of our Nvidia today and stopped on SMCI. So we're down to 30% exposure in the S&P 500 as it bounces around still. Well, it's not really bouncing. The bounces are getting sold, but it's still above the 100-day/20-week moving average. And then our recent Bitcoin ETF buy, the only other thing that we have left in the portfolio. Let's move on now. Note on GROTECTION, some of the taxable accounts are going to be down worse than this 0.64 because you had a bigger gains and a bigger allocation to Nvidia, but the baseline account had about 3%, and that was the number, the approximate number that GROTECTION is down there. So let's go to the S&P 500. You can see 6 straight down days and closing at the lows too in all these days. Selling, selling, selling. Market is not happy with something. Sometimes these things don't become apparent until later, but you can still see here that we're holding above the 100-day moving average. Since it's Friday, I'm going to bring up the weekly charts, and you can see on the weekly chart of the S&P 500 here that we're sitting right on the 20-week moving average, right at that 49.65 level. I mentioned yesterday that was perhaps an area where the NASDAQ 100 would bounce. It absolutely didn't. Let's go to the NASDAQ 100, down 2.1% on the day, down 5.4% on the week, and you can see the break below the 20-week moving average very clear there, and the break below the 100-day moving average on the daily chart. Dow Jones Industrial Average, which has very clearly been showing relative strength this week, actually flat for the week. That rising 100-day moving average is controlling the highs of the day on the Dow. That might be a coincidence, not really sure, but you can note the relative strength all week in the Dow. Let's go to mid caps. The S&P 400 will show the actual index, and that's still holding above the 100-day moving average, closed right on the 20-week moving average. And let's go to the Russell 2000 index. Below the 100, still above the 200, below the 20-week. The 30-week and the 40-week are very close to each other, and we're still above that level. We are down 2.8% on the week for small caps. Let's move over to the VIX. VIX, big spike up, but came down, but still up 8.1% on the week and 4% on the day, going in the wrong direction. If you're a bull, that is. Some people just love being a bear. And the breakout on the dollar continues to being held, kind of a 5-6 session consolidation here on the dollar, as you can see on the weekly chart, up slightly higher on the week. Let's go to the precious metals and Bitcoin. Here's gold up slightly on the day, up 1.9% on the week. Gold stocks up about 1% on the day, also up 1% on the week. Silver up 1.3% on the day, up 2.2% on the week. And Bitcoin with the halvening today, up 1.2% on the day, down 4% on the week. Let's move on to bonds now. Broad bond index, very tight range over the last couple of days, up 0.13%, down 0.6 on the week. So that means the average bond yield rose. We'll see that in a second. Let's go to TLT, the long bond, up 0.36%, down 1.3% on the week. So the price being down on the week, that's going to show that the 30-year yield was up on the week, up by 2.4%, but down 0.7 today. In the 10-year, the TNX down 0.7 today, up 2.6% on the week. So that's the inter-asset correlation that we track in every video. Let's go to the tail of the tape now. You can pause this. I'll hit the highlights. The huge overnight flush and recovery on futures, I already mentioned that in the news. 6-day down, 6-day below the 8-day exponential moving average, 6-day below the 21-day moving average on the S&P 500. Expectations decidedly negative with the state of where we are. Here's that 49.27 low that I have highlighted. As far as the sectors go, I noted, under the surface, money flowing into the value sectors, banks, staples, utilities, healthcare, and real estate. Dollar basically flat on the day. On the downside, tech, XLC, KNY, semiconductors, and software. So portfolio changes, stopped on SMCI, stopped on NVIDIA for non-taxable accounts. We closed that out. We hedged it using the NVD inverse, 2x inverse EDF for taxable accounts. So in the portfolio, down to SPLG and IBIT. Bottom line on the day, indexes closed mixed, but leaders smacked hard, especially AI and tech related. And also note, highlighted in red, the 21-day crossing down below the 50-day moving average. That's indicative of the weakness in the market. Let's go through the 21 over 21, but first I want to go through a scan that I run as part of the weekend work every weekend. So we're scanning for stocks above 60 million in daily dollar volume because we want them to be liquid and their price above $10, and above the 200-day moving average, 50-day moving average, and 21-day moving average. And there's 163 of them. So I'll have at least 163 stocks to take a look at as candidates for the 21 over 21 list that I'll rebuild over the weekend. The interesting question, of course, is going to be what sectors are they in and are they investable? And we'll discuss that in Monday's video. But now let's go through the 21 over 21 list. I mentioned that there were just a few that were positive. We'll start off with them. Raytheon, up 0.84%, of course, with the continued tensions in the Mideast and the Russia-Ukraine war. Plenty of plenty of sales for their products. Charles Schwab continues to hold up 0.7%, and First Solar got an upgrade, faded near the lows of the day, but still above the 21-day moving average. Those are the only three that were positive on the day. Now, CCJ, uranium mining stock, down slightly, still above the 21. GoDaddy broke the 21, down 1%. FCX still above the 21, but reversed. Coupang down for its second straight day, but begrudgingly giving back. This is what you like to see. 2 days down on lighter volume after 4 days up on above average volume. CEG, this is an alternative energy stock and breaking the 21-day moving average. DraftKings, all the way down to the 100-day moving average. Obviously, this will be removed. Wingstop breaking the 21. This is one of the holdouts above the 21 in the restaurant group. Amazon breaking the 50-day moving average. We had a theory or a thesis that money might hide in these big NASDAQ names because of how solid their balance sheets were, but you're not seeing that in any way, shape, or form. They're being used as a source of funds and money flowing into value names. Dexcom breaking the 21, AppLovin breaking the 21, Datadog breaking 3 moving averages, Micron crushed. This is part of the data center theme, no surprise there. Spotify breaking the 21 on above average volume, Pure Storage. This is also part of the data center theme, coming apart, as is VRT and ALab. And then, of course, NVIDIA breaking clear break on high volume. It's a sell signal. It's one of O'Neill's key sell signals, a break of the 10-week on high volume. Lock in your gains. Supermicro, something else, down 23% just because they said we're not beating earnings. So that'll tell you. And look at this now. Leaders, when they break hard. This is down from 1230 all the way down $500 to 714. Quite an amazing run. And it happens a lot with leading stocks, and that's why we have sell rules to go away with rules to get us in. And speaking of those rules, here's a comparison of us versus traditional advisors. We've been saying the time to move your money over from anybody that does not have a sell strategy to lock in your gains. You should have 20%-ish gains from November. No plan to lock them in means they can just give them right back to the market. You don't have to be helpless. You could just listen to us, and we present the pretty straightforward rules every day for how to track the health or the weakness or the riskiness of the market. As O'Neill said, anybody can get you in. Who's going to get you out? This is how we differentiate ourselves. And if you're interested, by all means, reach out to us. Our flagship portfolio is named GROTECTION. Compound word, grow and protect. Grow during uptrends, exactly what we did off of the lows from November, and protect during downtrends. You've seen us do it night after night over the last 2 weeks as we little by little broke down before very clearly giving it up at the 50-day moving average. And if you're interested in this approach, we'd love to talk to you. The email's don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. And with that, I'm going to wrap it for the week ending April 19th, 2024. Remember, it's not how much you make in the markets, it's how much of that you can keep. Thanks for listening, and have a great weekend.